Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, August 28th, 2019. In this video, I want to take a look at some commodities, particularly some of the agricultural commodities. I might hit on copper as well. Won't get to the energy commodities such as nat gas, crude oil. We'll do those maybe in a separate update. And I'm not seeing anything very compelling right now. That's why I backed off my updates. Every now and then I'll, throughout the week I'll post things in the trading room, especially if somebody asks. But right now I just want to go over this as potential trade ideas and more so diversification within a portfolio. I'm a big fan of both obviously diversification, whether you're an active trader or an investor, and also asset allocation. Asset allocation is a way to diversify your portfolio among different asset classes. So for example, portfolio you might have at any one point in time, let's just say you're 60% into the equity market, stocks, and then maybe you have a portion into bonds, and you could be long or short, but again, it's just different asset classes. So that would be bonds, and then the other asset classes, break it down: gold or precious metals, there, commodities, and over time, again, this can vary, and that's going to depend on each trader. But by doing that, what happens is if you have all your money in the stock market, into equities, whether you're bullish right now, bearish, long, short, if you're wrong, you lose a lot of money because you're positioned against the trend. The stock market can be a tricky thing. Sometimes it seems like it's almost so easy, it's ridiculous when TA is working well during periods of volatility, and then other times, maybe the most obvious bullish or bearish technical pattern looks like it's going to go one way, completely goes the other way, and so therefore, again, I like to spread out my bets, so to speak. All right, so let's just dive into the charts, and I'll give you guys some ideas. So this is coffee. This is, when we're looking at these light colored charts here, normally in my videos, this is from stockcharts.com, and you can see the symbol up here. Now these are the what they call the continuous contract. So these are futures, and they just splice the futures contracts together. That's what they call the continuous contract. EOD, keep in mind, that means end of day. That's what stock charts gives me. I'll go to some live futures charts on some of these in a second. So whatever's happened since yesterday's close is not yet reflected here. And big part of my trading, you can see this goes back several years right here, and you can see basically it's not everything, but I like to look for these divergent highs and divergent lows, as divergent highs, and then I always say divergence in itself is not a buy or sell signal. It's that a sell or buy signal comes on a break of support, resistance, a trend line, a bullish or bearish candlestick reversal pattern, or some other buy or sell trigger. So the divergence gives me a heads up. Hey, there's most likely a trend change coming, and then in this case, back here it's a divergent low, and then there was a breakout and back test. So there was your rally. That's what a swing trader would get right up to that target, and same here. You can see divergences down below here on the chart, positive divergence, divergent low, there's your breakout. Divergent low, the divergence was building. I mean, we had divergence at this point, but let's see, we continue to have it here. So I like to equate divergences to overbought and oversold readings. Overbought can become more overbought, so you don't just short on the first overbought reading, or same with oversold. And but it is a heads up. For example, here we're overbought. You can just go back in time, look at all the overbought readings, and is that a time to get to start going long? No. In fact, if you had to do one or the other, you want to short when the RSI hits overbought. You can see there, or at least heads up, get out of your longs. Likewise, when you're oversold, that's often when a security bottoms. And also remember, depending on the trend, if you're in a strong bullish trend, overbought tends to become more overbought or stay overbought for an extended period of time, and vice versa during a downtrend with oversold. So where am I going with this now? Here's the latest. We have some small but pretty clear positive divergence, bullish divergence right now, with coffee futures recently making a lower low, and there's a downtrend line as well So looks like we could get a buy signal here in coffee. That was the last one. That was our last official long trade. In fact, let's go to that chart. JO is our proxy because I know a lot of you don't have a futures account or the experience or capital to trade futures. And keep in mind, there's some nuances as well. You need to be aware of, the trading hours. For example, coffee and some of these ag commodities do not trade. They shut down trading during the stock market, 2:30 p.m. or so, and then halt and then open up again later that night. And when you're trading these ETNs, you if you're not familiar, you might wonder why every day, 2:30. Things like wheat just stop trading, or they're trading because they're ETNs. They're still trading, but they're just not moving, and that's again because the futures may have stopped trading. So this is JO. Our last official trade was right here. We took it long on this breakout, hit our second target at that time. With the first target, I said I favored to continue to move up and was not taking any profits. Expected us to go through there with very little, if any, reaction. When we hit T2, I said I did expect a reaction. There was divergences, reasons to take profits, and then recycle back in. Same thing when we hit T3. I right after that target was hit, same day, I put a followed up and said, look, we're probably going to get a pullback. It's an objective time to book profits and get out. We had a lot of things in the chart saying overbought conditions, divergences, an uptrend line to watch as well to kind of zero out and look for a sell signal, and all that happened. Now what I did is I left on because it was a long-term trade, this T4, and I raised the stop to protect profits at that point. I put the stop up at some point in this trade, I believe, above the entry price, and that's it. So that one was stopped out recently. I can't recall if I've updated that on the front page. I've really been remiss on moving some of these to the completed trade categories. Always just look at the notes anytime you want to see a trade here. For example, come in like this. If you go to active trades, see I still need to move that away to the completed trade categories. Click on the symbol up top like I just did, Joe. And there's all the trades related to this one. You can see, you go into the first post related to that trade right here. It'll have the original trade parameters, but then you need to check along the way for any updates, because along the way I may revise price targets or stops. So there it is. That's when the last, actually not the last update. Last update was right here, and that's when we hit the target. And the odds were, that we're going to get a pullback in coffee with all the charts there. Okay, so again, it may be setting up for another move with the divergences, that low-level bullish crossover on JO, and then let's look at the longer-term weekly charts, and this is the bigger picture. Commodities, like I say, these ag commodities, appear to be setting up for possibly a major bottom into the bear market, but it's still the primary trend, at least for a while, last few years. For example, here in coffee is clearly bearish. I mean, there's the trend. So here's a weekly chart. This is kind of the bigger picture here, and you can see. So we have a downtrend line right there that needs to be taken out. We've been building divergences. You can see down below for a while. And here's our divergence right there on the RSI. This is the divergence on the PPO down here. And we keep coming up and hitting this downtrend line. So these are the trades. There's been these swing trade opportunities, and we'll call them, they're bear market rallies. That's what they are. But they're powerful and worth trading. And then if and when this can break out, the coffee can break out ideally above this downtrend line impulsively, I think there's a lot of upside. So that's it. And again, I'm not doing this video because I see a hard buy signal. These are more of setups right now. There may be a trade. There's been quite a bit of what I would say disappointment with the technicals, where these things have set up divergences that sometimes don't play out recently. Let me look at another chart for. No, it's not in JO. I'll show you. There's another commodity coming up here that I'll use that example. But just to update here with KC, these are coffee futures, KC, and you can see what I have a couple different downtrend lines here. Let me color this tool right here, this color. So this is downtrend 1 right here. Forget about the arrow, just imagine that's a line tool. And you had this nice divergent low right here, positive divergence down there, and I had an alternative trend line right here, and that was taken out. Here, let's get rid of that arrow tool, make it a line tool, and there's the resistance right there. So we broke out, and we've been hitting. So what I see here, let me clear all these out for you. It looks like a potential basing pattern right about here. You know, coffee's been hitting this level, and again, these are coffee futures, made almost a perfect test of that previous low right there. See that previous low, and we had actually a couple lows around there. So this is pretty decent support on coffee. So you can either go long on a pullback to that level. It might have been mentioned here recently, but at this point we already hit it. You know, I would look for a breakout above that these recent highs. Coffee's a little bit whippy, and these are the futures again. And if it can break it out, and it looks to me like it will, like I said, these have just been a lot of fits and starts in some of these commodities where you start to break out, and just as it looks like it's going to get going, we dump back down again. So you can hear the hesitation in my voice. It's just been a persistent bear market in commodities, these ag commodities, but there have been some trades. So I don't mind every now and then I'll take some of these breakouts, I get stopped out, and I just move on to the next one, wait for the next setup, and then catch one of these runners. Because when coffee wants to run, it can really run. It's it's trends pretty well. You can see by these trends here. Now here's a choppy period you're in, but then you have to respect support. So let's just say, well, that was a sell signal right there. You can see we had the divergence right here. You see the negative divergence on the chart. So again, it trades fairly well to the technicals, and right now we have a bullish setup, and so you can either buy it at support, or since we already hit that support level, look to buy a breakout. And you can see these are all potential targets right here, each and every one, all the way up to this one. How to trade that depends, it's up to you, but I think on a breakout, solid impulsive break above this level, especially a 60-minute close, and then at that point you can just trail stops up. You watch, you may start to get an uptrend line forming here. It's a bit early, and that might be another level to buy pullbacks to that trend line. So there's coffee via coffee futures. My confidence isn't high enough right now to put JO on as an official trade, although I may consider it, if I continue to see these charts firm up. And I'd like to see participation with the other ag commodities as well. Let's look at some more of these. Let's look at, we'll stick with the agriculture commodities first. And no relation, but let's look at cotton. That's BAL for the ETF. BAL, and this is that example I was telling you about a second ago here. So you had right there, you can see positive divergence, and here's an example how divergence is not a buy signal. It doesn't always pan out. We had divergence there, but it didn't really result in a breakout. But what happened is, here, I can now take that line away. I just wanted to leave it there to show you guys. It's not that the divergences really didn't pan out. They weren't negated yet. What do I mean by negated? Well, we had positive divergence there, right? The indicators, in this case the PPO I'm on, making a higher low versus prices making a lower low at that point, right? That's positive divergence. But we continued to move down. Prices were in a downtrend, and that's, again, you didn't have a buy signal at that point. So it's not that the divergences failed or that was a failed breakout or anything. We never broke out. We never had a buy signal. Prices continued lower, and however, the PPO and the RSI are still making higher lows versus prices making lower lows. That's positive divergence. So we still have a setup, and even a better setup now, because at this point, back then we didn't have a well-defined uptrend line, but at this point now you can see 1, 2, 3, and if we have another tag, that'll be 4 reactions. But we have 3 that helps to validate the trend line. Trend, don't make no mistakes about it, is clearly bearish. One trend indicator among many that I like to use is whether or not the PPO signal line, this orange line, is above or below the 0 line. That's 0 right there. And you can see when it's above the 0, below the 0 line, the trend is bearish. Bearish, bearish, bearish. And when it's above, the trend is bullish. And so you can see we were in a bullish trend right here. We're in a small bullish trend here. Looks like I had a trade on it back then with that divergent low. First target was hit, and then we reversed. So now, because it's in a bearish trend doesn't mean it will be forever. So we'll watch these divergences. There's what I call a trade setup. with a buy signal to come on that, a break above that trend line. Now that's the ETF. ETFs don't always do a perfect job of tracking, so let's look at the future. Okay, this is cotton continuous contract right here. Remember, end of day chart. Last time I updated this or posted anything on stock charts, this line should be like that. We had back here a downtrend line. I was watching, that would have been January back in 2016, saying look for, I gave you two targets here, T1, T2, instead of breakout above that line. Look at that, very impulsive. See, that's a setup, untriggered, and then it triggered right there. You had the first wave up, perfect tag on my first target, pulled back to the trend line, and here's a trading tip. So if you missed the breakout or second guessed it or whatever, didn't take it, after the target was hit, you pulled back to that resistance. Once broken, becomes support. So you had both the downtrend line plus horizontal. See that horizontal support line I have there, the dotted line. Dual support levels. Doesn't get any better than that. And from there we went right on up, hit my second target almost perfectly, a little brief momentum overshoot. And at that point, instead of holding out for more, the negative divergence said take full profits or go short, reverse it. You had negative divergence at that high, and then a big correction right after. So you can't stay too late to the party at some of these commodities. They tend to move quick. Next setup, it looks like there should have been a trend line right there, but I had a divergent high right here, just like a little divergent high there, and that marked the top. And so since then, cotton has been in a downtrend. This is a downtrend, series of lower lows and lower highs. However, it's now setting up, as you can see, the most recent trend lines. We have a pretty fairly well defined and very steep. It's usually the steeper a trend line is, normally the sharper the move out of it when it breaks out. And we have some pretty strong bullish divergences. That PPO is starting to curl down, so it'll need to curl back up. Otherwise, these divergences, maybe we come in and make a divergent low at a lower level. However, we're coming up on some pretty decent support. There's a previous reaction low from early 2016, and we're not far above support now. So cotton, if nothing else, looks primed for maybe a bear market rally, at least for the last couple of years. But there's one setting up right there for you. Where does it go? I think an obvious target would be right about there. That was a very important support level. Added a support way back here, and we hit it, helped validate it. Fell hard right there, brief momentum fueled overshoot, and then we reversed. So that's a reaction off that level. We traded around it for a while. Support, once broken, becomes resistance. So therefore, that would be the target there. Buy signal come on either a break of the trend line or maybe some type of bullish candlestick reversal pattern. So we'll just have to keep an eye on that one. Okay, when I look at weekly charts, when I go to a weekly, I'm typically going back longer term. Here are the years, so 2010. We're going back to late 2009 here. And this kind of paints a bigger picture. Back here, at this point, we had positive divergence, a divergent low, at least positive divergence on the PPO, and oversold. We didn't have divergence on the RSI, but we had oversold reading. And so you can see I'm going back, what is this, almost 20 years, and we were only oversold 1, 2, not quite there, but even better or as good, we had positive divergence. And then right now, and we've been persistently oversold for a while, but so really 1, 2, 3, and you can see if you went long there, you didn't really go underwater much. You caught, you got in a little early, or you bought that divergent low in the breakout, and there was a trend. So again, a longer term bear market, but plenty of bull market rallies or bear market rallies within there. And so what I like about it, check marks for a potential long here are the first time we've been oversold since all the way back here in 2014. We almost got there right there with that divergence. PPO has not yet made a bullish cross, but you want to look for that. And like I said, low-level bullish PPO crossovers typically come, and you get a trend reversal. A low-level bullish. This was a little whippy here, but again, these points in time we had divergence. We don't have divergence now. That would help set the stage for maybe a longer-term trend trade. But we might at least get a pop here. And again, we're coming up on those previous lows, so there's that trend line. And again, this is just setting up, and I think there'll be a trade on cotton soon. So something we'll keep an eye on. All right, next one up. is copper, and it's interesting. If you guys have traded or invested been around for a long time. They used to, for many many years, copper's nickname was Dr. Copper because it was so good at predicting future economic, changes in the, economic outlook. In other words, to predict recessions or stock market corrections when copper was underperforming, copper was moving lower, and it could predict things turning around when it started moving up. And that was because copper has such a, important industrial use, electrical cables, circuitry, things like that. So that's mainly where copper is used, and so therefore, if copper prices are going up, it was indicating, hey, things are probably picking up in the economy. Well, Dr. Copper was stripped of its PhD long ago. China started, there were a lot of distortions. Pretty much for the last decade, there have been distortions in the financial market everywhere due to, I believe, and I think others do, the excessive intervention by the central banks with their grand policy of quantitative easing, trying to manipulate rates, and so therefore we've seen a lot of disconnect. So just don't what I'm getting at is don't try to extrapolate what it might mean for the stock market. Let's just look at the charts of copper, based on how they look and not factoring in whatever the stock market's doing. I see positive divergence. It's been building now for the last year and a half or so. Nice, clean divergence. And this is a weekly chart, by the way. I'm sorry, nope, daily chart. PPO is still pointing lower, so it means the trend is bearish right now, but we had, you can see that line about 255. It's a pretty decent support level that caught the lows here. Let's circle them. We caught a bottom there, bottom there. We've traded around that level quite a bit here. A little bit of reaction there, but more so recently. We undershot it recently. That could be a bull trap. I'm sorry, a bear trap, that break below 255. So if copper can pop up on there and confirm these divergences, that could set up a nice trend trade. At minimum, I think we'd come back up here, and I should probably add another line if it can get beyond there, maybe all the way to this level here. You can see that's a pretty decent resistance. So we'll call it about little shy of $3, from about 285 up to about $3 would be a potential swing target. I don't have a really good downtrend line to watch. Let's see if that's a daily chart. Let's see what the copper ETF looks like here. This would be this is JJCTF. It's thinly traded. This is another one where a lot of the iPath ETNs they were retiring. They'll trade over the counter. So, but it'll it's still going to track roughly where that whole sector is going, or the commodity itself. I can't recall. I have to look into it. Some of these ETNs hold actually the companies instead of the metals. I have to revisit. I can't recall because I don't trade this one often. But you can see there's a downtrend line. Couple candles, but it trades erratically. But you have positive divergence here, just like you did back here. You can see, in fact, on my chart, you can see we had a divergent low right here, and that led to this rally. You had a divergent low right there, led to the rally up to here, and now you have another divergent low right here, and so that could lead to another rally. And again, we'd be looking at move up to at least right here, about 3150. There's also an ETF that tracks, I think, the copper stocks. Here, let's type in copper ETF, and we'll get the COPX. This is the Global X Copper Miners ETF. So instead of gold or silver mining stocks, you've got companies that focus on pulling copper out of the ground. Low-level bullish crossover, oversold. Most oversold we've been in at least the last couple of years here on this chart. There was our last clean, like I said earlier, a clean low-level bullish crossover. Clean meaning the lines are separated, not this whippy stuff like this back here. You want to stay away from. I like these clean low-level bullish crossovers. We got one there, we got one there, and if we go up anywhere from here, we're going to have another one. And like I said, that coupled with overbought or oversold conditions right there set the stage for a decent rally. This time, and again, even if they're just bear market rallies, which these were, that was a 16% rally. This one was about a 15% rally. And I think this one would be at least about right there, coming up to this point. About 18 and change is my initial target would be, and that would be close to, what was that, about a 13% rally. So there it is. So there's one to watch as well. Next up would be wheat. You can trade the ETN WEAT. Does a pretty good job of tracking the commodities. And these are, I trade these often, so it looks like a trade. Last trade idea we had on it was right here. Beautiful little bullish falling wedge we had back then. Positive divergences. We broke out, so that was your buy signal right there. Imagine we went long somewhere right around there. We might have even got it within the wedge. I can't recall. Hit first target. Came back tested it, went up, hit the second target, broke out, back tested, and then went up. I had the third target here, the final target, but as I said on that trade, that's where I had the line set, the resistance level I figured it going up to. But since it's an ETN, doesn't do a perfect job of tracking the futures, I was being conservative with that final target. And you can see it went right up to that level. So now we've come full circle. We don't have positive divergence like last time, but we have a pretty well-defined trend line right there. And again, another potential low-level bullish crossover. You see, we had tried to do it there, but it was rejected. On the PPO line, so that orange line got bounced off when it tried to make a crossover. So if we get it now, that could give us a trade here on wheat. And that's why I'm doing this video. I'm seeing quite a few of these ag commodities setting up again for the next potential swing trade. Targets, probably the same ones. Let's just say right here, that would be my first target now, about the 550 area, and then up here at about 594. And keep in mind, at some point, these ag commodities might eventually, well, sooner or later, they're eventually going to end their bear market, and there might be a trend trade to be made where you can just continue to trail stops up and hold on to these things for maybe a year or more. But as of now, let's just treat it as they're still in a bear market, and let's just look for bear market rallies. So there's wheat. And this is my long-term chart of wheat. This thing goes back to the late 90s. I mean, 1999. You can see all the way to the left of the chart here, and we have a trend line, a long-term. So this is in a a longer-term bull market. Although that's a secular bull market, but we've been in a really a more of a bear market since topped out here in 07. You can see, pretty much wheat going on to make a series of lower lows, although at this point we never took out that low. And again, we have the long-term trend line. The last long trade that we had in wheat, said it was based off both the daily charts, even the 60-minute, but a very large part because we had fallen to this long-term trend line. A lot of reactions along that trend line. I mean, again, going back, spanning nearly 2 decades there. So where are we at now? That last rally off the lows was 33%. I've measured these rallies. You can see all the things down here on the chart. I like to see these oversold readings, positive divergence. That's what we had last time. So the setup right now, I don't have the convictions I had on that last official long. Why? Because, well, we're still well above the trend line, and I don't have the positive divergence like we had before. We're not oversold, but there may be a trade nonetheless. Here's wheat futures, and again, I'm lukewarm on it, we'll say right now, and that's why it's not an official trade. But what we have here, or what we had, is a bullish falling wedge. The lines I just drew. There's your positive divergence. The lower line of the wedge is, I call the divergence line, shows prices making lower lows. There's your downtrend line. There was your breakout right there. I had also a price channel drawn this way, if you look at these two lines. And so far, we're in an uptrend since that breakout. It's not a very powerful one, but you can see wheat's making a series of higher highs and higher lows. That's a near-term uptrend. Now, what you can also do is an uptrend line, right here. So not the highest probability trade, but you could go long here on the uptrend line. It's only the third reaction. We really don't even have that reaction yet. If we get a reaction, that'll help to validate that trend line, meaning 1, 2, 3. I like to see 3 reactions to help validate a trend line. So there we might have the early makings. Well, we certainly already have the early makings of an uptrend. Again, more of just me passing along ideas that if you're looking for something to diversify your portfolio with any other potential long trades, especially something that's not correlated with the stock market, here you go. How to trade it, you can buy the pullback to that potential trend line with a stop somewhat below. You look at these previous reactions, they should hold, so you can set a support, stop, just below any of those reaction lows. What to target, there's a potential trend line that can come into play, but I would, at this point, based on what I'm seeing on the weekly charts and everything else, maybe just let it ride. If it starts to pan out, raise your stop to break even and see where it goes. That's wheat futures, and again, you can use WEAT for the ETN. And closely related because they tend to move together. You know, a lot of corn and wheat are often grown in the same areas, so affected by the same weather conditions, crop conditions and all that. And so these two tend to be a very highly correlated trade. Just keep that in mind if you're going to take one. If you have corn and wheat, you're not very diversified because they tend to move together. But potential low-level bullish crossover on the PPO, oversold. We had a divergent low here, and we had a thrust up. And so far, if corn can reverse soon, it could be the early makings of a new uptrend. And even if it goes lower, you have that previous reaction low, which could come into play as support. So again, a potential trade. I can't make a very strong case for it, but it's worth pointing out and sharing, and again, as a way to maybe add diversification to your portfolio. Here's what corn looks like on a weekly chart. You can see it's just really, for the most part, since, going back to late 2014, early 2015, trading in this sideways range. So therefore, it's range bound. But, the trade on that is you buy pullbacks towards the bottom of the range, you go long, and you sell towards the top of the range. This was a false breakout. And so we'll need to watch that. And you can see what happens. As I often say, fewer things in trading and investing are more bearish than a failed bullish breakout. So you broke out of the range, but the breakout failed, and since it's been an impulsive rejection back down into the range. So if we can continue lower, then again the setup might be that maybe we buy the bottom of the range again. If it breaks the bottom of the range, well, obviously that's bearish. If it breaks, and then you have the next support level down here that comes all the way back to these lows from 2008, 2009 or so. All right, I jumped over to a sugar weekly chart. Well, this is sugar futures. I'll get to the ETF in a second. This one trades well, and again, you can get these trends. There's big moves, a lot of money to be made, and in this commodity, a lot like coffee, it trends. When it gets in these trends, they're pretty powerful. And they're pretty unidirectional too. This is what I refer to as unidirectional rips and dips, meaning not a lot of givebacks or moves against the trend. Then you can see we're down in this downtrend line, this price channel, breakout back test, all highlighted back then, divergent low, boom, there was a nice trade to be made in coffee. I'm sorry, sugar. And then most recently we had a downtrend line with you've made up a bullish falling wedge, positive divergence, breakout, and boom, nice move up. So where we're at, I'll watch it. If it comes back, this has been a very important support level right there, about 11, just over 10 cents. And here's a potential downtrend line to watch. So we broke out. So my thoughts on this, maybe that's all there is for the breakout from that wedge, but maybe this was just the first wave up. This is a corrective wave, and maybe there's another wave to come, because again, this bullish divergence would indicate to me a larger move, something on the lines along this right here. So there's potential there in sugar. So let's look at the ETN for you ETN traders. That's SGG. And here, I'll have to mark this one up. I thought I had it marked up, but I must not have. So we'll draw some trend lines. There's a little wedge pattern there. Your divergence right there. So there's your breakout, your objective entry on a break of that trend line there on SGG. Where does it go? Again, that one you might just want to let it ride. I'll have to study the charts. I can tell you right here, an initial target right around this level here. But I'll often like to study the charts a little deeper and align my price targets with what the futures are telling me. But these would be two swing targets for the ETN. There's a potential downtrend line as well that may come into play. And we have finally last one. Maybe I'll cover the grain ETN in a second. But SOYB, soybeans. You can freeze the video. Look at all these are old notes back here. But we had a divergent low right there. Overbought. Simple things I look for. Overbought conditions. We don't have a lot of divergence. Well, we had divergences back here, but again, it's these overbought conditions that did the trick. You know what? I missed one there. That's odd. Usually I catch all these. There's positive divergence right there at that point. I guess I had that line marked. Yeah, I did. I had the line marked there, but I didn't have it on the indicators down below, or they somehow went away. So there it is. Positive divergence led to that rally. And then we had, again, the divergences were extended and led to this rally. So what it seems to me right now is we may be basing here. That looks like basing action right there. So it would give you a more powerful buy signal if and when we could break out above, wrong tool, grab a line tool, this downtrend line, of course the top of that pattern. So it could look something like this, breakout, and then a breakout of that downtrend line, and we could really trigger a new, pretty nice trend trade there. Indicators are kind of in the middle. They're not telling me a lot right now, so again, I can't make a hard buy, a hard case to buy right now, but just one to watch. And again, especially if we start to get some tractions. And then what was it? JJG, I think, for the grains. This one has coffee, wheat, and soybeans all together. So if you want to hit all the grains, there's one option. You're a little more diversified. That's a benefit to going with this ETN instead of buying all three. Again, that would be WEAT. Did I say coffee? I meant to say corn, wheat, and soybeans. That's what's in this one. And so there's a potential bullish crossover, low-level bullish crossover right there, just like we had one right there. Gave you that rally. This wasn't clean, but that would be it. Where does it go? I'd say a target, swing target, minimum would be up to right about here, about a little 46.25 or so. Let's wrap it up here. Again, I'm just trying to throw out ideas. I'm lukewarm on this. There's maybe another, swing trade here, and at some point down the road, maybe a trend trade. If looks like the bottom, at some point the bottom's going to come in the bear market for these commodities. Up until then, we just have to treat these, bullish setups as swing trades, bear market rallies within a larger bear market. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.